nations to prevent another one. But here at the 5th annual CGI, heads of state, CEOs, and philanthropic leaders are trying to find solutions to some of the world's thorniest challenges. The theme today is going to be innovation. And to give you an idea of the caliber of speakers here, we've got Ted Turner, as you know, Goldman Sachs CEO Lloyd Blankfein, Alibaba CEO Jack Ma, ExxonMobil CEO Rex Tillerson, and also former Vice President Al Gore. All of them will be speaking later today. And also, I will be talking momentarily with Eli Broad. He is the founder of KB Home, and we're going to be discussing everything from the housing crisis to his art collection and also to education, which is a personal passion and also a philanthropic passion of Mr. Broad. And also a little bit later, I'm going to be sitting down with the president of Iceland. Now, his country has been one of the worst hit in this global recession. As you know, the krona, the Iceland currency fell by about 80% because of this crisis. So how is Iceland pulling itself out with an IMF bailout? So a lot coming up in the next 2 hours. You do want to stay tuned. In the meantime, though, it is Fed Day, and Ben Bernanke and policymakers are expected to keep the benchmark index rate near the record low. We have that story covered from all the angles. Lindsay Arendt in D.C., Suzanne O'Halloran down at the New York Stock Exchange, and also John Ehrlichman looking at the markets desk, looking at the Fed buying up mortgage-backed securities to help the markets. Let's start with Suzanne, though, setting you up for the trading day. And Suzanne, what's the sentiment like right now?
Well, the sentiment's positive, Betty. We are seeing U.S. stock futures modestly higher ahead of the Fed's 2:15 decision. Of course, traders jockeying ahead of that decision. No decision is expected on interest rates, but the statement, of course, will be very key for traders today. And we are seeing particular strength this morning in tech shares and some of the financial shares. I'm going to start with tech because we have Seagate Technology shares rallying this morning by about 3%. The company boosting its sales forecast. This will be a stock to watch. It's a NASDAQ 100 company responsible this morning for some of the strength in those NASDAQ futures. In the banking sector, keep an eye on names like Bank of America, Fifth Third, and J.P. Morgan. We have the team at Collins Stewart talking about their favorite banks. These are some of them, although they do say the banking sector still has challenges ahead. These are some of the stocks that they like. I also want to update our viewers on the dollar. We have the dollar, of course, Betty, trading at that one-year low against the euro. On the view, the global economy is recovering. It's a little bit weaker against the pound as well. Betty?
Okay, Suzanne, thank you very much. Well, investors are waiting for the Fed's announcement at 2:15 Eastern Time. Ben Bernanke and his colleagues are expected to keep the benchmark interest rate near a record low. Now, the big question, though, is what else will they say? That has been very key these last few meetings. And Bloomberg's Lindsay Arendt joins me now from Washington with those details. Lindsay?
Well, Betty, analysts say the Fed really has to strike a delicate balance, right? Because they have to, on the one hand, indicate that, yes, economic prospects have brightened. But at the same time, the Fed really has to continue to provide support to ensure that there's going to be a lasting recovery. In fact, if you look at the numbers here, 93 economists surveyed by Bloomberg unanimously forecast that the Fed will leave its benchmark interest rate unchanged at a range of 0 to 0.25%. The markets, of course, are always parsing that all-important policy statement. Analysts say you're going to want to watch that wording especially carefully today. Fed officials are likely going to reference the recovery for the very first time. But again, at the same time, they're going to hold on to that pledge to keep the benchmark interest rate near that record low for the time being anyway.
Remember, June 24th, the Fed talked about the contraction slowing. The word contraction was there. Then on August 12th, the Fed talked about activity leveling out. So the word contraction was removed, which alludes to what we heard from Chairman Bernanke, which is that the recession is over. So from contraction to activity. So something more along those lines is likely.
Now, one expected topic for debate is going to be whether to extend that end date of the Fed's $1.4 trillion program to buy housing debt into 2010. It expires at the end of this year. And also another issue is whether to gradually reduce the size of those purchases. We're going to be looking for that today in the policy statement. As far as inflation goes, Fed is likely to repeat its view that inflation will remain subdued for some time because of slack in the economy. Don't forget, consumer prices did fall 1.5% in the year that ended in August. And once again, that all-important policy statement coming out at 2:15 p.m. Washington time. I'll be there in the lockup. I'll get you that information, details, as soon as they're released. Back to you, Betty.
Okay, Lindsay, thank you. Lindsay Arrington, Washington. Well, as she just mentioned, a key question on Fed Day: will policymakers signal that the $1.25 trillion mortgage-backed securities buying spree is nearing an end or not? So John Ehrlichman has been looking at that angle and what it could mean for mortgages. John.
Yeah, Betty, an hour ago we got some weekly numbers related to the mortgage market. Very interesting to see refinancings were up more than 17%, and that on average the 30-year fixed mortgage below 5% for the first time since mid-May. The Fed, a huge influence over what you're seeing at the bank when you look at the mortgage rates, because they've gone into the market for mortgage-backed securities, gobbled those up to keep mortgage rates low. Dan Greenhouse at Miller Tabak points out that at this point, and we're talking a lot about the Fed shrinking its balance sheet, that mortgage-backed securities make up upwards of a third of the Fed's balance sheet. With the improving economy, are they going to move away from this? As Lindsay was just asking that question, one thing we can tell you, when you look at Merrill Lynch's mortgage index, or an index that looks at what's happening in this market, if we look at the option-adjusted spread, it's a little bit wordy, but all that means is it's pricing in the possibility of mortgage prepayment. Those spreads have been an absolutely incredible story over the past few months. They were north of 155 basis points in January. They're now down to 29 basis points. So the Fed goes in, they buy these mortgage-backed securities. It helps that story. We did speak with a strategist who says because of the shakiness in the housing market, that story is not going to change based on what we hear from the Fed today.
Okay, John, thank you. John Ehrlichman at the markets desk. Well, another event in Washington today that you'll want to keep an eye on is Timothy Geithner. He has a message for Congress when it comes to regulatory reform. Time is the enemy. The Treasury Secretary will be on Capitol Hill today. In his testimony, Geithner will say an improving economy is not a reason to delay reform, that the time is now. The White House is pushing for tighter regulations on Wall Street, and one key provision is the creation of a financial product safety board aimed at protecting consumers from unfair lending practices. We've talked quite a bit about that on our program. Well, joining me now, though, with his thoughts on the Fed and more specifically the housing markets and the economy is Eli Broad. He is the founder of KB Home and Sun America, and also, of course, founder of the Broad Foundation. And Mr. Broad, thank you so much for joining us and stopping by.
Good to be here this morning.
Okay, so I wanted to, before we get into the housing markets, though, here at the Clinton Global Initiative, I mean, you've been here in years past. What are you planning on getting out of this year's meeting?
You always learn quite a bit. The G20 panel yesterday was fascinating. All the panels here are fascinating.
Yeah.
You learn quite a bit. You meet people that you haven't seen for quite some time. It's good to hear the opinions of world leaders.
Right, and it's a tougher time these days because of the financial crisis. Now, Mr. Broad, when you were on Bloomberg Television before, I think it was back in April, you were talking about the fact that you thought the housing markets were going to bottom out in 6 to 9 months' time. We're about at that 6-month mark now. I mean, how much are you seeing the rebound?
I think we have bottomed out in many markets, not all. Some are still woefully overbuilt. We still have a wave of foreclosures ahead of us, but I think we bottomed out. In fact, we're seeing firming of prices in a number of markets, not all.
But inventory is still a very big problem in some of the markets, and some say that if you look at the number of foreclosures, the foreclosed homes that banks are still holding, that those have yet to be released into the markets, and therefore housing prices are likely to take another leg down.
Well, I don't know if they'll take another leg down, but there is quite a bit of inventory, which means you're not going to have much housing production. And it means that we're going to have to keep rates pretty low on mortgages in order to get more and more people to qualify for homes, whether they be single-family, detached, or condos. Mm-hmm. And in some markets, the inventory is so large, it's going to take a number of years before we go back to what I'd call normalcy.
Well, how many years do you think it'll take before the housing market here in the entire United States gets back to normal?
Well, there's no one housing market. Every metropolitan area, every state's different. In some places, it's going to be a year. In some places, it could be 3 or 4 or 5 years.
Okay. All right, Mr. Broad, hang on, because we'll be back with you to talk more about the housing markets, but also about the economy and the Fed. So we'll have Eli Broad, founder of the Broad Foundation from the Clinton Global Initiative, and also, after a year's absence, the New York Yankees are back in a familiar place. We'll have that story and more coming up.